Good afternoon, students. In front of you is your tutor, Gertrude Namando. I'm going to present for you the content of now the DES. We call it Accounting Module 1. And I'm welcoming you to 2019. I'm wishing you the best. Let it be a year of hard work. And where there is a will, there is a way. Okay, the content that I'm going to present students, things have changed. In the past, every examination had a presentation. But now Iol have asked us just to do one presentation that covers the content of the May examination, the August examination, and the November examination. So it's very important that you read through what I'm going to present. You cannot study half and then leave out the other one because you don't know which one is going to be in which examination. Okay. On a question paper, they start with keywords. We have some of the keywords like state, name, list, identify. There you just need to give fact. You don't need to define it or you don't need to describe it. If, like for example, if they ask you list the books of first entry, you just say cash book, debtors journal, because the keyword is saying listing. You don't need to say cash book is the books where we record the cash transaction. Is not needed. So you need to familiarize yourself with such keywords. And then now if we say define, you are now giving a brief meaning. Like now if I ask you define cash book. Now there is when you tell me cash book is the book of first entry where we record the cash transaction. Because now the keyword is saying define. And then explain, you are indicating the relationship between things. You are giving reasons. You want to make it clear. You are giving examples. You are giving characteristics. And then if you are to differentiate, normally if they ask you to differentiate, they give you two things. And then now you give the difference between the two. What is the difference between a cash book and a petty cash book? Obviously, if you give the definition of each, you are now giving us the difference. And the other keywords, students, I want you to read about those keywords in your modules, the ones that you were given. You find the keywords. Okay, now I'm going to take you through the debtors journal. Now the debtors journal is a book where we record all the credit transactions. If customers come to our business and they buy goods on credit, we record them in that book. And then the debtors journal, it's now also very important that you know the debtors return journal. If the customers return goods to our business, they bought goods, later the customer, after going home, they realize maybe the dress is torn. If it's items, they realize that maybe they bought plates and then they are broken. So that means there is a fault with that material. Or they bought shoes. When you go home, you find out you have shoes of one side, you return. So they are faults. Now when the returns are made, the business now no longer enter those transactions in the debtors journal, but they record them in the return journal. And then from there, from the debtors journal, and the return, the information must now be posted to the debtors ledger. And then from there, the totals must again be posted on the general ledger. So it's very important that you read through the theory. But mind you, student, these are some of the easiest accounting books. We don't experience problems with these books. Students know what to do and they score well here. And very important, you need to read your theory for you to do the practical part. And the next book that I want us to look at is the bank reconciliation and the updated cash book. The definition of a bank reconciliation, that will be a statement that is used to reconcile. What do you want to reconcile is the difference between the bank balance as in the cash book to the bank balance as per bank statement. So what is happening in the business? The owner they are recording things in the cash book. And then what is happening in the bank? The bank people, they are recording the thing in what they call a bank statement. So now it's very important. Now you just want to, as a business, you just want to reconcile. At the end of the month, you get the bank statement from the bank, and then you just want to reconcile. Is the same things happening? What you recorded, is it what the bank recorded? You just want to reconcile your books. Now, when we are preparing the bank reconciliation statement, there are steps that you need to know. And once you know these steps, it will be very easy for you to get it right. Okay, now what you do in step number 1, you compare the bank column. We are now talking of the debit side of the cash book to the credit column of the bank statement. Now you have your cash book and you have your bank statement. Now you are comparing. And then in number 2, you compare the bank column, which is the credit side of the cash book, to the debit column of the bank statement. And as you are comparing, students, you are either having a pencil or a pen, and you are ticking all the items that are in both records. If they agree with each other, you tick them off. You tick them off. And then now, all the things that are not ticked, you are now going to update. And when you are updating your cash book, you are now going to prepare the supplementary. The reason why we are calling it a supplementary is because what? You did the cash book, now you are doing the second one, that is now the supplementary, just to update it, to enter things that were left out or the things that were not ticked. Now, in that supplementary cash book of yours, what are you going to write? All the unticked item on the bank statement, which is the debit side, represent the standing orders, the direct debit. Remember, it's only the bank that knows this thing, the bank charges. Now you are going to enter them on the credit side of the supplementary cash book. And then from there, the next step, all the unticked items on the bank statement, which is the credit side, you must enter them in the supplementary cash book, which is the debit side. Remember, here we are applying the double entry principle. And then when you are done with your cash book, you balance it off. And then now from there, from your bank statement, you are now going to draw up the bank reconciliation statement. Remember, here we want to reconcile. Now in the bank reconciliation statement, all the unticked item in the cash book, which is on the debit side, that means it represents the credit outstanding deposit, and it must be entered in the bank reconciliation statement on the debit side. And then unticked item in the cash book on the credit side, that means it represents the debit unpresented check, and it must be entered in the bank reconciliation statement. So these steps, if you go through the steps, it will be very easy for you to do a bank reconciliation statement and a supplementary cash book. And I want you to read on page 159 to page 163 in the accounting didactic module, or your NAMCOL module, which is module 1. You go to the table of content, and then you look at where it says bank reconciliation statement, you read through. Now the format of the bank reconciliation statement is either you use this format where you start off with a debit balance as per bank statement. So you go to your bank statement, and then your debit balance, you enter it on the debit. And then the credit, the outstanding deposit, all the outstanding deposit, you put it on the credit side. All the unpresented checks, you enter it on the debit side. And then all the corrected credit balance, you enter it on the credit side. Now students, in accounting, it's very important, because now if you just know the format as it's appearing in the details column, and which one must be credited and which one must be debited, in the examination they'll only give you the transaction. So what are you supposed to do? The format stays the same, but now for you it's just to enter the figures either on the debit or on the credit. It's either you use that format or you use the second format, where you start with a credit balance as per bank statement, and then you credit it, and then all the outstanding deposit you credit it as well, and then you debit the unpresented check. And then now here you now bring in the corrected debit balance as per cash book. Now it's either don't use both format at one time. You must choose the format that is easier to remember, and you only use that format. And the supplementary cash book, we don't have the cash and bank now. We only have the date, we have the details, we have the folio, and then the amount, or even say bank. We only make use of the bank columns, not the cash columns. And then the next theme is the accounting equation. Now the accounting equation, we are looking at the formula that says assets is equal to owner's equity plus liability. So in other words, the assets of the business is equal to the owner's equity plus the liability. And the second step, when you are doing the accounting equation, every transaction is having an influence in two accounts. So when you read the transaction, it's very important that you find out the account that is receiving must be debited, the account that is giving must be credited. And then the increase, you indicate it with a plus. The decrease, you indicate it with a minus. I like the table on page 77 on the accounting equation. It gives you all the possible transactions in accounting. They've already identified for you the two accounts, and they've already identified for you the effect. Is it on asset? Is it on owner's equity? Or is it on liability? And then where there is no effect, you don't just leave it like that, but you put a 0 to indicate to the marker that there was no effect there. And the next theme that I want us to look at is the trial balance. Remember this one, the supplementary cash book, we have already spoken about that when you are doing it goes hand in hand with the bank reconciliation statement. Now the trial balance is now done after posting to the ledger. When you post to the general ledger, now you re-enter those amounts in the book that we call the trial balance, because we want to check the correctness of the posting. So the moment you add up the debit side and the credit side, if the two agrees, that means your posting was correct. But if it does not agree, that means there was an error. There was an error that was done, and I want you to read through the trial balance, and it's very important that you know there are errors that affect the trial balance, and there are errors that are not affecting the trial balance. I want you to familiarize yourself with those errors. And then from there, the next book will be the debtors control account. In the debtors control account, it's a summary of all credit customer transactions over a given period of time. Now it's only the businesses that knows their given period of time. It's only the businesses that know which time of the year, which time of the month are they doing the summary, because they want to know all the total numbers of the customers that owes them money. And then when businesses are drawing up a debtors control account, they make use of information from the general journal. They make use of information from the cash book. They make use of information from the debtors journal, and they make use of information from the debtors return journal. So they want to know an individual customer, how much money are you owing on credit. And then from there they want to know if you make any returns. And then sometimes when you make returns, you get another product. But sometimes when you make a return, as a customer, you decide, no, I don't want any product anymore, just decrease my amount. As a business, they need to know from that certain customer, was the customer given an interest? Maybe the customer failed to pay on a monthly, and then money was added on. They will add it on your account. They want to know all these things. And then in the general journal, they want to find out. So now that is why they have a summary that is now called the debtors control account. Each customer now, they want to know what is happening in your account, taking in consideration when they combine all your information from all these books. And then the balances in the control account, it must be equal to the balances in the debtors ledger account. You need to double check, is it the correct information that you are entering for that specific customer? And then if there is a difference in the account, and then the person that is working with the accounting books, they need to go back and rectify where is that mistake. Because remember, the customers, when they come to your business, they want the correct information, because some of the customers, they are also making a record for themselves. Every month when you pay, you are also recording. Your balance is now supposed to go down, it's supposed to go down, and then you will know when you are done with that account. And then the next book is a creditors control account. Now the creditors control account is a summary of all the credit supplier transaction over a given period of time. Now this one is now happening, is now no longer the business that are recording this, is now the supplier. Remember, now there are also some of the suppliers that allow the business people to buy goods on credit. Now they make a record of all the businesses that owes them good. They make a record. Now, where do they find the records that they are making? They are getting it from the creditors journal. They are getting it from the creditors return journal. They are getting it from the general journal, and then they are getting it from the cash book. Again, just as I explained with the debtors journal, here again they just want to have a summary of one business that bought goods on credit. If they return goods, did they get new goods? Did they decide just subtract my account? They just want to have that summary. And then again, when you add it up, it must balance. And if it's not balancing, they need to go back. Where did they make errors? Because remember, the business people also, they want the correct information about their account that is provided to them. Now that is what they do on the creditors control account. The general comments that I want you to go through. The students, please, I advise you. In the past, I have experienced where students are leaving blank pages. Please, I press on your heart, do not leave a question blank. Read the resources that will give you answers. And ask for help. I'm sure around you there are so many people that have done accounting. Ask for help. And student, it's very important that you buy yourself the supplementary books. They ask you to buy the module from NANCOL. It will really help you a lot, because the Iol did not go in details of the content. But if you buy this supplementary information, it will help you a lot. And then read through the books of first entry. We are now talking of the cash book, the debtors journal, creditors journal, their returns, the petty cash book, the general journal. You need to know how to calculate the discount allowed and discount received. Remember, discount allowed is given on the customer, discount received is given on the business. It's very important that you know how to calculate this, because sometimes in the cash book they'll tell you this customer bought goods on this, there is discount allowed, or the business bought this, there is discount allowed. If there is a discount that is allowed, the customer or the business will not pay that original amount, but it's going to decrease. It's very important that you know. Read through the general ledger. You must know how to post to different books. Read through the journal entries, the balance sheet, and then student, very important, you are given a syllabus, a course outline of what you have to know. please, you need to go through that. And the module 1 accounting, I find this to be easier because these are just the books that are easier to do in accounting that is now in module 1. And please students, I repeat, this content is now not only for May examination, but it's both for May, August, and supplementary examination. And please, I don't want students to call me or email me and ask now which from the presentation which content must go in the May examination. No, I will not be able to answer you, but just please go through the whole content.